This video is for educational purposes only and should not be considered financial advice. Please do your own research and consult with a financial advisor before making any investment decisions. All right, I'm going to try a little something different here. I'm going for a cleaner looking chart. This is a weekly chart that I'm looking at, and I'm going to put in some support and resistance lines by using a fib channel. So this should be interesting. We'll see what happens. That's a pretty decent area right there. So I'll just connect these areas of support and then expand that up to about, probably go to about this area right here. So now I've transitioned from a weekly into a daily chart, and you can see where my fib lines are from me drawing that on the weekly chart. So it's got a pretty decent areas of support and resistance have come into play. At this point I've extended the fib lines out to the right, and let's get to where we are right now. As of right now, we're trading at $4.41 on NAT, Nordic American Tanker Limited. So with this resistance in mind, we are pretty much right in the middle of the Bollinger Band channel, hitting up against resistance, have moved, and if I'm doing anything with this option, I would be trying to go long. So I would be selling a put. All right, so I've brought in my MACD indicator, which is giving me somewhat of a bullish indication just because the histogram is beginning to move back up, although we are definitely not on the correct side of the histogram for my trade setup. Also, the stochastic is just dead in the middle. I have a tendency to really want it to be down here around 20 if I'm going to set up for a long, which would have occurred back here once again. Here, and of course this would have been under and turning. So here, that's really what I'm looking for a setup, and I am not getting it with this. So I'm going to pass. The July 19th, 2024 option is selling. A put is currently paying 35 cents. If you take 35 cents and divide it by $4, that's an 8.75% premium that you'd be receiving for putting the $4 at risk. And let me just kind of mark up how that would look on the chart, just as an example. So basically what I have indicated here is if I was to sell a July 19 put at 4, that would be this price right here. So effectively we're sitting at 441 right now. You would have to first get down to my strike price of $4 and then go another 35 cents into the money before I would be at break even. So this is my break-even point here, this line. This is my strike price. This is our current price, and any movement sideways or down to this point right here or up would benefit me in that I can use time decay, and this is if I place this trade today, I'd have all the way until July the 19th for that transaction to play out. As you get closer, the time decay will work in your favor, but if you get significant movement up, it also works to your favor where you can buy back the contract at a significant discount. Another thing that I like to take a look at is the Fibonacci time zones just because if I'm selling an option or buying an option for that matter, it's all about time. So I'm basically looking at trying to buy my contract back. If I'm selling a contract, selling to open, I'm going to buy to close. And so as we progress for the first month, if price movement has reduced the amount that it cost me to buy the contract back by 75%, well, I'm going to buy it back. It'll cost me a quarter to buy it back, but I'll get to keep 75 cents on each dollar. As it progresses past that, I expand that out. So the next time period would be me buying the contract back, but this time I'm only going to be willing to spend 20 cents on it. And this time I'm only going to be willing to spend 15 cents on it. And at that point in time, I just leave it at 15, and eventually time decay, assuming that we're not in the money and or below, time decay eventually will work to the point where my contract is automatically bought back for me. This is actually how I do this, is I set this up on the MACD as far as the time zones go. That way, as this progresses, I know when to change the percent that I will purchase back the contract, the underlying contract. And that is all that I have to say about that on a trade that I did not take, but it kind of gave me an opportunity to kind of show you how I visualize prior to taking a trade. I want to know exactly how much room I have between where we're currently pricing, where my strike price is, where my break even is. I'm looking for the position of the MACD and the RSI. And hopefully the next time I do a video, I'll have something to actually trade. Trade well.